Hey guys, hope you are all having a great day. Let me begin this video by stating the following: get ready for a massive rally. You should be preparing for a full-on market bull run, because today's stock performance, though bearish, showed one undeniable truth, and that is that the bulls are starting to fight back hard. For months the bears have remained in control of the market, with rate hikes to fight off inflation and now worsening Ukraine sentiment, but these two things are temporary. We had some really bad news come in this weekend, with pretty much every major corporate media news headline having the word war in it. Yet, the market reaction was nowhere near as bad as everyone anticipated. In fact, all around the internet, I saw people saying they are buying and strengthening their positions. As such, I think what is happening is that we are nearing the worst part of where we could theoretically get, but there is a caveat to this of course, and I want to explain it in more detail. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with what happened today. Russian stocks went down bad today, shedding them from 10% which they lost yesterday to about 20% so far this year. The ruble, which is their current, fell 81 versus the dollar before a recovery. Their central banks had to announce emergency measures to support banks so that they did not collapse, and if you think these bearish catalysts are nearly over, think again. President Biden announced today that the United States will impose new sanctions on Moscow after Russian President Vladimir Putin ordered troops into two Ukrainian territories on which the Kremlin has claimed for years. Biden remarked that this is the beginning of a Russian invasion, putting Putin's statement that they were coming in as peacekeeping as a blatant lie. Biden was very stern in his speech, saying Russia has no justification for the aggression they have done, citing it as directly attacking Ukraine's right to exist. Biden said NATO is moving to strengthen the defenses of Estonia, Latvia and Lithuania, though he stated that the United States has no intention to fight off Russia. The most important part for us investors came right after that segment in the speech, where Biden talked about the measures he is taking against Russia. He declared that he would impose sanctions against two major Russian banks, limiting their ability to finance sovereign debt. The European Union's top diplomat said the group's foreign ministers had also adopted sanctions against Russia, which are likely to cause a spike in energy costs since Europe gets 40% of its gas and 26% of its oil from them. Declines in the Russian stock market are all but assured in the short term. If Russia decides to push in further, the price they will pay for their aggression will most likely be getting their banks cut off from the rest of the global financial system, sending them back in a very dark and blind path moving forward. Germany said they were halting certifications for major pipelines, which will cost Russia tens of billions of dollars. The sanctions we saw alone today are already being priced in, with analysts saying they should easily knock off 1% of Russia's gross domestic product, and that more aggressive measures will easily reduce their economic output by 5% at minimum. Russian economy is up for major shock if they don't begin to escalating, and if a war fully begins, I really don't see how Russia comes out alive from it, since they will 100% be shut off by the rest of the world, as Biden already threatened. Now, let's bring the topic back to our market. If we begin imposing high sanctions against Russian exports of oil, prices will rise and severely cut into consumers' spending power, which is already laden with high inflation. It is important to note that these sanctions have not yet begun, as they are being used to counter a more hostile Russian aggression. Technical strategist John Kolovos at Macro Risk Advisors talked about at what point do oil prices destroy the stock market, which he said it would be something north of $120 to $130 and how quickly we get there. Oil prices are already up 24% this year, but West Texas, the benchmark for the US market, rose about 1% to a bit over $92 a barrel today, which is still below the multi-year high of $95. So right now, the situation is the following. If Russia attacks and begins a war with full-scale invasion, sanctions will be quickly placed, and the price of oil will go up. Depending on how quick, we could see a more volatile and affected stock market. If the prices of oil quickly surpass $120 to $130, chances for a stock market crash are essentially guaranteed, depending on how government intervention will go. Is a Russian invasion of Ukraine still imminent? Hard to say. I still believe nothing will happen, and that all of this is just drama and political games, but that's just my take. Right now, the S&P 500 is more than 10% below its January peak. Stocks hit that correction territory again today as the trading day was red. Yet, Even amidst all of this, I am bullish, and I don't mean that as what I usually say about being positive about any price dip. I really mean that I am bullish for the stock market overall. When I step back and look at how we are falling, how we traded today after all these terrible news, I see a strong stock market. The fact that we didn't slide down today, and were actually green early in the morning actually shocked me. It implies that investors are bullish. I made a long video this Sunday talking about how much exposure the US economy has in Russia. Though what matters over there will have a direct effect on us, I don't think they will seriously strain our economy. Inflation is high, and it is bound to grow in the coming months, but the rate of growth is what is important, and I think that the rate already peaked. This means that numbers will soon begin cooling off. I also don't think the conflict between Russia and Ukraine will last very long. I think stocks will begin to move up aggressively, and that the discount is almost over. JP Morgan is expecting the Fed to hike interest rates for 9 straight meetings, and this does impose major risks to the markets. Majority of experts think it will begin on March, especially after inflation came out considerably higher. This means that the banks will have to act more rapid, and like I said in the previous video, if they get the numbers wrong, we are screwed and we could see further market losses. However, I actually think they will get it right. The fundamentals for a strong bounce back are there, and consumers are all bullish. Spending is high, investors are buying, and the markets seem to be having problem breaking lower. Right now, only 2 things could usher us into a market crash, and that is if oil prices explode as a result of a Russian war, and if the Fed gets interest hikes wrong. I am very skeptical these 2 things could happen, though keep in mind that is just my opinion. If they don't, we are going to see a massive shift and rally in the markets that will bring everything up. Everyone who got caught buying this glorious dip will be rewarded. Let's now talk about today. The Fed submitted over $1.699 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 48% of the total volume today, while dark pool trades for GameStop accounted for 47% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bearish performance, losing over 7% for the day. It opened in the pre-market well below the closing price it had in its last trading session. AMC would move continually up, staying above the VWAP for the most part until market opening. Upon market open, AMC fell to 16.75, only to bounce back in the following minutes above 18. However, this bullish run would only last a few minutes, since market conditions sank AMC down to 16.11. After a short run to test VWAP at 17, AMC began breaking support again, closing at 16.47, below the VWAP. As for tomorrow, market is way too volatile to predict anything. It will have support at 15.80, 15.40 and 15. Resistance will be met at 17, 17.50 and 18 for the most part. GameStop traded bearishly today, losing over 2% for the day. It opened to a drop that took it to 114.19, the lowest point of the day. After that, it bounced up to 122.75. After that run, GameStop retraced again, finding support at 116.75. It maintained itself trading right there below the VWAP for most of the day, until it began moving up, this time running to 123.25. It began dipping again, closing at 118.06, below the VWAP. As for tomorrow, market is way too volatile to predict anything. It will have support at 116, 114 and 112. Resistance will be met at 122, 126 and 130. Again, it's almost impossible to predict price movement, so keep expectations down to a minimum. I apologize for the delay in the video. I was reading a lot today about everything going on, and it's hard to produce a timely video with things changing every seeming hour. Thank you for making it to the end of the video. That is all I have for you guys today. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. We are nearing 4,000 members. I have tons of rooms there for interesting conversations, from meme stocks to full-on market analysis. I also provide day trade alerts for those that like to make money on the daily trading runners. There is something for everyone there, so come on, join us already. If you want to support this channel, I have a Patreon link in the description, as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.